Thank God it's Friday. Welcome to Business Morning. I'm Ini John Mekwa.
And I'm Blady Williams. Thank you for joining us. First, let's take a look at what's in the news. Oil prices eased on Friday as concerns about the patchy rollout of COVID-19 vaccinations around the globe tempered optimism over recovering fuel demand. Brent crude was down 13 cents at $71.18 a barrel, and falling 4 cents on Thursday, following a gain to the highest since May 2019. The contract is on track for a gain of over 2% this week. U.S. oil fell 10 cents to $68.71 a barrel, having dropped 2 cents in the previous session, while heading for a gain of nearly 4% this week. OPEC Plus predicted demand will exceed supply in the second half of 2021 after agreeing on Tuesday to continue with supply restraints through July, and that actually lifting prices. Slow progress of the Iran nuclear talks is also expected to provide breathing room for demand to catch up before Iranian oil returns to the market if a deal is reached.
And back here in Nigeria, the Central Bank of Nigeria is set to resuscitate the cotton, textile and garment sector as it plans to increase cotton production, the capacity of ginneries and textile companies in the country. This was disclosed by the CBN Governor Godwin Emefiele via the Apex Bank's Twitter handle during its cotton, textile and garment sector stakeholders engagement. Mr. Emefiele says that the move in the sector will achieve self-sufficiency in production, create jobs and enhance skills across the value chain.
And the National Pension Commission has increased the minimum regulatory capital requirements of the pension fund administrators from 1 billion to 5 billion naira with a 12-month transition period effective from April the 27th, 2021. A circular by the Commission explains that the increased capital injection is necessary to maintain service standard and improve capacity of the PFAs owing to the rapid growth in the value of pension assets under management by 244%. It adds that the growth means greater responsibilities that requires more operational capacity by the PFAs. PENCOM states that it is monitoring the process and pension fund custodians are not affected by the recapitalization exercise.
And the International Labour Organization says at least 220 million people expected to remain unemployed globally this year, well above pre-pandemic levels, with a weak labour market recovery worsening existing inequalities. The United Nations agency forecasts the outlook improving to 205 million unemployed next year, but still well above the 187 million in 2019 before the pandemic. According to ILO models, that equates to a global unemployment rate of 6.3% this year, falling to 5.7% next year, but still up on the pre-pandemic rate of 5.4% in 2019. Take a listen.
We expect the employment situation will be worse in low-income countries. High-income countries will close the gaps the fastest thanks to their better access to vaccines and their strong fiscal policy support. An estimated 31 million working people are now classified as extremely poor, living on less than the international poverty line of $1.90 per day, as defined by the United Nations. Let me put it in another way. 5 years of progress in reducing working poverty have been wiped out by this crisis.
Okay, first one is Laurent Siro from the Swiss News.
You're welcome back. Well, like you heard there from the ILO, we'll be discussing on the report of the ILO. And to discuss on that report, especially as it affects Nigeria, we have Mr. Oluwayomi Triumph Abaton. He's a former Dean of Student Affairs of Landmark University and founder president of Arrow's Leadership Development Foundation. Good morning, Mr. Triumph Abaton. Thank you so much for joining us.
Coach Triumph.
Good morning.
Great to have you.
Good morning.
So you heard there what the ILO said about the impact of COVID on unemployment, and the world is likely to keep facing the issue of unemployment at this level until 2023. Are you worried about this?
Yeah, it called for worries. It called for worries, and well, we are here with COVID, and COVID is here with us.
COVID is here with us.
But whatever has a beginning equally has an end. And so what I've seen happen during COVID is like there's a shift in the industry. Okay, the data that we have now is still based on the physical appearances of employees at the place of work. But there's a shift now. A lot of people are employed, but in their homes. A lot of people are doing great in their homes. Even, you see, the shift had not been captured. And that's why even in the US now, the cryptocurrency, I don't know if I can say that.
Sure.
Okay, the cryptocurrency industry, they're having a switch because the federal government of the United States wants to equally regulate that. They want people to be able to pay taxes. Okay, so there's a shift in the industry. Okay, it's no longer as a physical, that you have to be at work, you have to do this. So the percentage I was seeing globally, and especially even in Nigeria, you find out that people are doing well, but the number of people appearing in the offices are reducing. And so what is happening?
So are you trying to say that the number of those working virtually have not been captured yet? Is that what you're trying to say?
Yes, that's what I'm saying, man.
Okay.
The number of people working virtually had not been captured. So we're still depending on the physical appearances. And so, but a lot of things are going on behind the scene. A lot of things are going on. You could see the number of people on internet now has gone skyrocketed. Every nation, they're expanding their bandwidth to capture more people.
Well, even before the pandemic, we still had, labor issues, and coupled with the pandemic, it now, opened up, the gaps, facing us right now. So what do you think the government should be doing right now?
Okay, in Nigeria, our government, all the places I've been and interviewed, I don't talk about the negative things that anybody is doing. I want to talk about the solutions. And so the solution for me in Nigeria is government should create platforms for young people that have gifts, enormous talents to explore, and equally regulate it, and so that they can pay their taxes and they can do one or two things. Okay, so there's so much the government can do. Government doesn't have business and doesn't have to be in business, but they can create a platform for young people. And I want to talk about young people from age 15 now to 24. That's huge. And these are talented individuals. Okay, so they want to do so many things, but the platform is not there. The environment is not okay for them. Insecurity everywhere. I mean, the environment. Bank will want to collect everything. Somebody wants to collect everything. And these guys, look, there's a better way you can manage us and make us, provide better things for ourselves and equally for the country.
Okay, so I want to take you back to what you talked about, the virtual, employment, because at the moment, Nigeria's unemployment is about 33.3, and that moved us from the 5th to the 3rd position, highest unemployment level in the world, and projection is that it's going to get worse. Now, are you saying this figure now has not captured the reality, the new reality?
It has not.
Wow.
It has not. For example, let's use Nigeria as a factor. It has not, because when you find a lot of young people doing well. You see, I don't want to categorize people that are doing well as Yahoo boys. There are so many other things that they have learned that could be done online. And they are engaging themselves with this. And you have not captured them.
Even with the skits and all that.
You have not captured them.
Skits, yeah.
People are sitting now. Okay, for example, one skit done with 3 minutes and you charge 2 million naira. You have not captured that. So these are the things. There's so many things going on, so many improvements. But because there's no structure in place, there's no system in place, there's no proper arrangement of things in place, we couldn't get hold of that.
How important is it for this set of people to be captured into the data?
Very important. The country is losing a lot of money, for example. And so if you understand the dynamism of these young people and what they do online, and then you bring them to book, not stifling them, not killing them, no, but bring them to book, make it workable. provide a better data. Like Senegal, for example, there's a particular local government in Senegal that all the young people can go there and register free. You have free data. And so you have young people, you have a lot of Nigerians there. They go to that part. It's just like a library. Okay, the government created free data, but they are being censored. And then you pay. And government is blessed, and they are equally blessed. So there's so many things that we are not capturing, actually.
Okay, how do you see, take for instance now the gig economy? Like all over the world, the gig economy is actually, making an impact, helping, people find work, flexible work in their own time. But do you think the penetration here is substantial? Because I know we have, cab hailing services, but what else, should be done to actually improve this gig economy in Nigeria?
Beautiful. For example, so many NGOs are trying and training, equipping young people. But, we don't manufacture anything in Nigeria, for example, so phone is still very expensive. Laptops are still very expensive. Even the data, they are equally still very expensive. And so what we could do and what the nation can do and what the government can do, the pastors can do, is to make all these things available. When you make this thing available, then you can equally now know that you can subcharge from all these people that are using your services. And that is huge, because we shouldn't be looking at the number of people that do not have access. They are much more than the number of people that have access. We have population in Nigeria, but the number of people that do not have access to these gadgets, they are still much more. And so, those people that do not have access to the gadget, they still have the capacity because they've used their friends' own. So if they have theirs, they will be able to empower themselves. I've been, as a youth coach, youth development coach, I've been to some workshops that young people will tell me, sir, all I need is just a phone. And I ask them, what do you want to do with a phone? Because I want to be sure that you can service the phone. And they give me a list. And I'm telling you, even in church programs, I do buy handset for people. Because I know that if that young person that has a vision and has a content and is exposed to he has a gadget and he pushes his product to the online, definitely he makes money for himself. And then, that burden is off everybody's shoulders.
And there's also a need for them to be regulated, not abuse some of these platforms.
You see, when it comes to abuse, very few people are abusing this thing. These young people that we are looking at, teenagers, for example, some of them have passed abuse. They don't want to recognize themselves with abuse on the internet. Because there are things that you can do legally and earn legal money. Push content and you earn money. Rather than dancing, there are some young people that they have value. Okay, that they will not push their naked bodies, they will not dance and shake their waist or something, but they don't have access to gadgets. So few ones that have access to gadgets, but you can see what TikTok, for example. If your followership got to a particular amount, you'll be heavily rewarded.
You get paid.
Okay, but those people are not equally captured. Those people are not captured. You have some people in the UK and the US that pushes content and they 1 million followers. They are usually paid. And that is why the federal government in the US is saying that, look, guys, we need to monitor this thing. Some money, we are leaving money on the table. And the same in Nigeria.
All right.
Well, the federal government has some programs. There's the 774 jobs program. There's the startup program to build entrepreneurial spirit. Are these what we need? How effective are these programs?
I have issue with our federal government. The issue is positive, though, because they are our fathers and our uncles, and they are trying their best. But the truth be told, and the fact is, the federal government cannot solve the problem that we have in Nigeria. It's beyond them, and we could see it around us. So they should engage people that have been tested, people that have tested shallow waters, and they have succeeded in shallow waters. The federal government should engage them to be able to deal with issues. For example, this stipend that's being shared, money that's being given out, how many do we have? Okay, they've given out, let's say, assuming they've given out 1,000.
Yeah.
Okay, 1,000, they've serviced 1,000 young people, okay, to entrepreneurs. How many have come back with a testimonial? And so, in a way, it's like a waste. This is not working like the Tony Elumelu's program, that entrepreneurship. That one, it has a result. And so we should get engaged.
So what should the government be spending on?
Government should not spend by themselves on entrepreneurship. They should create a platform, and the platform I'm talking about, which is system and structures. And we're looking at local government. The local government should work. When the local government work, and you have a department that take care of work, that job creation, young people in the local government will register, and they will do well. And so local government should be directed to that assignment, not at the federal level or at the state level. The bigger assignment for them to get involved into. Not the job of local government. Job creation is local government. So give it to them. And another challenge we have with the local government is that you're putting politicians in local government for what? Politicians don't have any business in local government. Put people that have grown through the ranks and file in civil service. People that are administrators. People that have the fear of somebody. That, look, I have to put my book in place. These are the individuals that should be in local government. Not politicians that do not know what to do. Do not have the empathy for people. And then you can't even solve any problem in your local government. And so when you talk about giving out money to raise up and stir up the entrepreneurial spirit of young people, you don't do it from the federal. You get down to the basics. You come to the local. Because cells, until when our cells in the body has developed, grown, and broken down, we don't develop as a body.
So we start from the bottom, basically.
Yeah, well, I think if we're to discuss that, we'll go into politics and how to choose our leaders and politicians and all that as well. But we really have to thank you so much, especially for the expression of passion.
Thank you so much.
Thank you.
It shows you've been working closely with the youth for a while now. Thank you so much for being with us this morning, Mr. Oluwayomi Triumph Abaton, for sharing your passion with us this morning on Business Morning.
Thank you.
Thank you so much.
So we'll just take a short break now. When we come back, Business Morning continues. Stay with us. Well, yesterday, the naira was flat at the import and export window at 410 naira 90 kobo for a dollar, but depreciated by 0.2% to 499 naira per dollar in the parallel market. To discuss more on happenings in the FX market, Omotola Abimbola, investment analyst with Chapel Hill Denham. Thank you so much, Mr. Omotola, for joining us this morning.
Thank you, my pleasure. Thanks for having me.
All right, so pressures are resurfacing once again in the FX market, with the naira touching 499 naira to a dollar in the black market. What's driving this? What's going on?
Thanks for the question. So regarding what is happening in the black market, it's very, very hard to actually pinpoint a particular reason for the volatility that we are witnessing there, because it's a very speculative market that lacks depth. But one thing we can say is that we look at events occurring in the global and domestic economy. It does appear as if demand is recovering once again, both in the global and domestic economy. As we are seeing economies being reopened, on the back of the strong vaccination campaigns that we are seeing all across the world. And the same thing we can say for Nigeria, where the economy is gradually reopening once again. And typically, when we see a very strong demand, it aggregates demand in the economy, particularly for services, such as international travel, etc. We normally experience a lot of pressures in the foreign exchange market. One key factor that we can probably, allude to the pressures we are seeing in that market, beyond speculative forces, of course, is probably because, we are seeing demand once again increasing in the economy due to reopening plans. On the other side, regarding supply, I don't think we have seen a very significant rebound in terms of supply. We do know that last year in September, central bank resumed intervention still across different segments of the FX market, particularly the BDC segment. So then they started selling $10,000 per BDC twice a week. But given the fact that economic activities are now strengthening and demand is international travel, perhaps one thing we could say is that the level of supply in that market is no longer enough actually sustain the demand pressures in the BDC segment. So, I mean, we've seen a couple of developments in the markets as recently. We saw the CBN, central bank, a week ago, actually adopts the versus and exporters window rates with the official peg or the official exchange rate for the economy. And that's a very positive step in terms of the goal of converging the different multiple exchange rates in the market. But I think more has to be done. We need to get more supply into the market, and I think the CBN also needs to allow for more flexibility in the pricing of the currency versus an exporters window, so that we can unlock more autonomous foreign currency into the economy.
Okay. All right, Matala. So, all prices have been on a tear, lately. Is there any hope that, the pressures might, actually ease and we may start to see some, convergence in the FX rates?
You made a very fantastic point. We are seeing crude oil prices rallying once again. Yesterday, I believe oil prices were at the Brent crude futures, which is the major global benchmark, was above $71 per barrel in the global oil market. And that's a pointer to, both recovering demand, the global economy, as well as the fact that, supply, there are so many supply constraints in the market, coming from the fact that, the OPEC plus cartel, they've been very, very cautious in actually increasing their production. We do know that last year, at the peak of the COVID-19 crisis, the cartel, jointly agreed to trim their production by about 9.7 million barrels per day. But up till today, they've only reduced that cost by roughly 3 million barrels per day. So supply not increasing as fast as the market would like it. And we're also seeing inventory, being drawn down, back to levels that we last saw before the COVID-19 crisis. So demand is picking up for oil, and supply, on the other hand, not increasing as much as the market would like it. And that's why we are seeing the sharp uptick in oil prices. Now, regarding how this would impact Nigeria, particularly the foreign exchange markets, I think this is a very positive development for the economy in general, particularly for the fiscal accounts. So we do know that the 2021 debt assumption was based on a crude price forecast of $40 per barrel. So we are having $17 per barrel at the moment. That's a sizable upside in terms of oil prices. But where we appear to be underperforming, I think, is production. Okay. So the production volume that was assumed in the budget is about 1.9 million barrels per day. Meanwhile, we are still producing, less than roughly 1.7 million barrels per day. So for fiscal accounts, it's positive. And then for external accounts, particularly for the FX market, I think it's a positive development, but it might not be enough to completely offset all the pressures that we are witnessing in the FX market. And our base case scenario is that they need to see, further devaluation of the currency in the high-and-low window.
All right, Motola, some analysts have argued that before we can get any meaningful, response from this market, the oil market, that the oil price will have to get to at least $103. What do you think?
I don't think we need to get to that level. Based on our own, scenario forecast, if we could manage to get oil prices, back to, around $80 to $100 per barrel, and we can get production level, very, very important production level back to pre-crisis level. To a very large extent, Nigeria can actually, start recording current account surpluses again. So, which would to a very large extent ease some of the pressures that we are seeing in the FX market. But I think if we even go beyond what is happening in the foreign market, we also need to pay attention to what is happening regarding the government borrowing plan. So based on the 2021 budget, the government can borrow up to $6.1 billion externally outside of Nigeria in terms of foreign currency loans. So, based on that, we do understand that the federal government now in the process of actually raising, debt from the international capital market. So if we could have a very successful transaction, maybe we might not be able to get the entire $6 billion in one. But if we can get a substantial portion of that, through the external borrowing, I think that will contribute in terms of trying to alleviate pressures in the FX market. But another major upside is for the naira, or what I can say, a positive development that could happen for the naira is the current conversation at the IMF, on allocation of SDRs, standard drawing rights. So the IMF is talking about allocating about some $50 billion of SDRs. Based on Nigeria's quota in the IMF, that would imply that we could get up to, $3.4 billion SDR allocation. I've also had a number of developed countries rather that are now talking about trying to lend their own SDR to developing countries such as Nigeria to aid, the country's response to the COVID-19 pandemic. So if Nigeria is very lucky enough, to number one, get a substantial foreign currency loan in terms of the 2021 government borrowing plan, if we're also able to secure, SDR allocation, from the IMF, and also get more developed countries to actually lend, to Nigeria from the SDR reserve, then perhaps we could be thinking of close to $10 billion of autonomous that will be going into the central bank's account. So I think to a very large extent that will hit them actually, begins to increase their level of intervention in the foreign exchange market. But I think one thing is very, very important.
So we're almost out of time. So there's a debate going on about the true value of naira. Would you say at this time that naira is overvalued or undervalued or just right?
Okay, that's an interesting question. To answer that question, we think that it depends on the markets that you are looking at. Based on fundamental analysis, based on what we call the real effective exchange rate that is being used to determine the fair value of a currency, based on inflation rate differential between the country and its trading partner. It does appear, that the naira is valued in the investors and exporters window, where the currency is currently trading at 411 naira. And that level of valuation, based on that real analysis, suggests that naira could be valued in that particular segment up 10 to 15%. So if you look at the hand here window, our response will be that, definitely it does appear as if the naira is actually overvalued in that market. But if you look at the parallel market or the street market, based on fundamental factors, not based on speculative forces this time around, it does appear as if naira is actually undervalued, in that particular segment. But like I said, the fair value based on the real effective exchange rate is between 450 to 455 naira. But I think for currencies, beyond fundamental valuation, sentiment also play a very big role in determining the value of currency. So, and that's why it's very important for the authorities, the monetary and fiscal authorities, to try as much as possible, to try to ensure that that there are positive, that we have more positive sentiment drivers, for the currency that would aid, the process of trying to convert the multiple exchange rate. The last time around, when we had a similar foreign exchange crisis between 2014 rather, and 2017, Nigeria had to actually overcompensate, by devaluing more than it should have, due to the fact that we had a closed market for a very long period of time, and we virtually chased foreign investors from the market due to lack of flexibility in the pricing of currency. So, in terms of how we resolve this particular scenario we are facing as a country, I think it's very important, that the central bank ensures that we have more flexibility in the pricing of the currency that would, at the end of the day, encourage more foreign portfolio into the country.
All right. Thank you so much, Omotola Bimbola, investment analyst at Chapel Hill, Denham, for sharing your thoughts with us this morning on what's happening at the Forex market. Well, we'll now go to the market, looking at the market numbers, and Willie Bong is always there to bring us up to date. Will, what's happening?
Good morning, Nini. It seems like there's a flicker of hope for investors at the stock market yesterday, but really, there are really no fundamentals driving the market. But let's look at the numbers. The stock market advanced by 0.7%, and this moved the all-share index to 38,548.24 points, while the equity cap was at 20.092 trillion naira. All thanks to MTN, who laid the golden egg, and let's not forget that MTN recently debuted on the domestic bond market. This has increased the month-to-date to 0.3%, while year-to-date loss moderated to 4.3%. Over to the activities chart, we see that volume, value, and trades increased compared to the previous trade. Sovereign Trust Insurance was the most traded stock by volume with over 35,000 units, while Zenith Bank was the most traded stock by value, and all traded in 3,524 deals. Over to the sectoral performance, most of the sectors we tracked recorded gains, except for the banking counter, which was the sole loser because of the losses in stocks from FB, First Bank, and UBA. We also see that the consumer goods are up 0.23%, industrial goods 0.01%, insurance was up 0.06%, oil and gas 0.05%. Now, to speak more about this, we have Mohammed Kayode, stockbroker at APT Securities. Good morning, Kayode.
Good morning.
Mr. Kayode, despite the decline in the banking index, we've seen an increased interest in the stocks of Zenith Bank in terms of value. What is driving this?
Yeah, in some of what's happening in Zenith Bank is, I think it's an association for the fact that the half-year result is coming at the end of the month, and also they are expecting interim dividend that Zenith normally gives at the end of every half year. So they are expecting, investors are always expecting that this interim dividend will come, and that is why they are investing in that sort of continuity.
Okay, what would you say is the outlook for next week, seeing how things are going?
Okay, the outlook is to me is positive because of the fact that see what has been happening from the beginning of the week. We only have 1 day positive negative posture. Rather, while we have 3 days positive, we have 1 day negative posture. While we have 3 days positive posture. So that positive trend is likely to continue to the next week because of the fact that we're moving to the half year, and that's the season of earnings, and we expect that some of those top banking stocks will always come out with their interim dividend at the end of half year results.
Thank you very much, Kayode, for your input on the program. That was Kayode Mohammed, stockbroker at APT Securities. Now over to the unlisted market. The NASD was up 0.52% yesterday at 761.55 units, while the market cap closed at over 540 billion naira. We also saw an increase in the volume of trade, value, and deals, which was at 3.4 million units. The value was 69.34 million naira, and we all traded in 43 deals. The unlisted securities, the top gainer for the unlisted securities, was the Central Securities Clearing PLC, whose share price rose more than 3%, and topping the losers chart was the Nigerian Stock Exchange, which lost more than 5% of its share price yesterday. We move on to the fixed income market, where the bonds market remains bullish as prices continue to rise and yields are dropping across all segments. To the national treasury bills, we see that observed a drop in the value of treasury bills as well. Bills traded yesterday was low due to sell-offs by investors. And the CBN treasury bills, we see that the special bills of the CBN there was a rollover of the May 31 bills, which will expire, which will mature in 30th August, on 30th August 2021. Over to the OMO markets, we see that we observed more sell-offs in the OMO market as yields increase. But we are hoping that the markets will continue to grow and to function properly in this financial climate that we are in. And we see consistent buying pressure from people on the short end of the long end of the curve because of yields that are growing, and probably that would also drop the prices of increase the prices of those bonds and securities. But Ini, what do you think will happen to the bonds if people keep buying the long end, especially the 2037, 2045, and 2050 bonds?
Yeah, well, you know how it goes. When the pressure goes this way, there's a lot of buying. Then the prices go up, and then you now see people doing a lot of sell-off, and then we go back to the deep, and then more people go buying the deep, and then, you know, it's just a circle that keeps going, and I expect that's what will happen eventually or in the nearest future in both markets. Well, thank you so much, Will. Thank you for bringing us up to date as usual, and enjoy your weekend. We'll now take a break now. When we come back, a business morning, we'll head to London. Juliana is there. Welcome back. It's still Business Morning on Channels Television. We now head to London, where Juliana is waiting. Juliana, good morning. Thank God it's Friday, but I guess just before we go on to that, we'll have to do business. Well, yesterday we talked about the global minimum tax. Now, Rishi Sunak is aiming to secure a fair deal. The United States is delaying imposing tax on the UK and some other countries. How do you see this playing out at the G7 talks?
Good morning, Ina. Yes, it's a big day in London, big day on the international finance scene. We've already seen the pictures of the G7 finance ministers, including, of course, Janet Yellen from the US, take some pictures with Rishi Sunak at Lancaster House. They're going to be talking for 2 days ahead of the main G7 summit next week. It's a big deal because if this corporation tax is agreed in principle, this is going to be the biggest overhaul of the tax system in more than a century. So it's definitely seen as a historic moment, especially for America, because, of course, this is Biden's big plan and it's a big shift away from Donald Trump, and he's very kind of localized politicizing. This is a huge global stance. We are optimistic. A lot of the markets are optimistic. They're expecting a deal to be forged, not necessarily today or tomorrow or even next week, but this is going to be a nice prelude to the G20 meeting, which I believe is taking place next month, and of course the OECD meeting. So yes, got a lot of big fish in London, lots of security over the next 48 hours or so.
And the trade war between the United States and China took a new turn yesterday after the U.S. blocked 59 tech Chinese companies, including Huawei Technologies, following an amended Trump order. How are investors in the UK digesting this, and how is it likely to affect their decisions?
Well, it hasn't really moved markets. It didn't move markets overnight on Wall Street, so definitely it hasn't really been picked up here in America, here in the UK. It's definitely significant because, of course, any time the world's two largest economies are fighting, it does trickle down. But we've seen this over the past 4 years, haven't we? We already witnessed this with Trump and Xi Jinping. So it's pretty much the same as before. And I think a lot of people are quite surprised, actually, that the Biden administration have decided to carry on this pretty hawkish stance with China. We saw this with the Uyghurs. They were part of the European community to put sanctions on Chinese officials. And they've also been pretty outspoken about what's been happening in Hong Kong. So pretty much same as before. Biden did sign these executive orders banning any US investment in these Chinese forums that are believed to they could interfere with national security. So, yes, no reaction in the market, but Biden showing his stance to China, to the rest of the world.
Okay, and yesterday you painted a beautiful vacation picture, and now Portugal has questioned the UK's decision to remove it from the green lists. From next week, Tuesday. How are they taking that?
Well, not great. This is a massive story. I've got to say this is probably the biggest business story in Britain today. And all of the travel and tourism stocks are down, very, very down. I think, you know, the closest place I'm going to get to a holiday abroad might just be this top. This is the closest I think I'm going to get to a Caribbean island. Portugal also has been taken off of the green list. A lot of people not happy about that. Tourism bosses basically have said that Britain have closed its borders. We're expecting more holidays to be on the green list. They've actually added more destinations to the red list. Several destinations now across the world. If you want to come to Britain from there, you've got to go into a hotel for 10 days. So it's a massive, massive story. Summer could indeed be over, but we'll just have to wait and see what the British government have got to say next week.
Yeah, certainly we'll wait and see, Juliana. Thank you so much. We'll be expecting you at 1:30 p.m. during Business Incorporated. We will know you have more updates for us by then.
Thank you. Thanks.
Yeah. So we'll now move over to the crypto space with Laddie Williams. Laddie, it's the opposite of what we saw yesterday.
Oh, yes.
Not a good one.
Yeah, and obviously your friend Elon has been tweeting again.
Yeah, he has a broken heart.
This
Who
time,
broke his heart?
Yeah, he's been sending subliminals. Let's look at one of the tweets that he put the broken heart emoji, you know, and with Bitcoin. So we don't know what it's saying, but it seems to be some kind of breakup with Bitcoin. That's what some analysts are saying. Then responding to that tweet is Justin Sun. Justin Sun says he's going to buy up every Bitcoin that Elon Musk sells. And he's in love with Bitcoin right there with the love emoji. Anyway, this is what it has done to the markets. It's red. Yesterday was all green, if you remember. Well, now we have Bitcoin at 36,000. Just after that tweet, lost about 5% of its price. And right now we have fear. Looking at the fear greed index, we have fear now at 27. It is better than extreme fear. Shows that there's some, you know, little confidence coming into the market. Market cap is down 6%. 24-hour volume went up by 4% at $122.02 billion for the total crypto market. Bitcoin dominance is edging up a bit there, up about 0.41%. Price of Bitcoin, 36,657 at 8 a.m. this morning. 24-hour volume traded $37.97 billion. Ethereum is down, hit harder, down 8.37%. 24-hour volume, $31.30 billion traded in Ethereum this morning. Let's talk to Michael Inaji now, digital market analyst. Hello, Michael.
Hey, good morning, Laddie. How are you? Happy Friday.
Good morning. Happy Friday and happy Bloody Friday. Well, we have the CBDs, central banks actually, you know, working on their own digital currency. So I'm wondering, are they going to have the nature of Bitcoin? You know, Bitcoin has, you know, limited supply and unlimited demand. Do you think it'll have that nature?
I don't believe it's going to be a finite currency. I think it's definitely going to resemble what we know today. In terms of like CBDCs taking hold in the world, in Asia, in Southeast Asia, especially China, about 60 to 70% of all transactions that are done on mobile. And so you have a situation where for a lot of the world, most of the currency is already digital. And so central banks basically see that people are already moving into that next generation of currency. And so basically the features of the CBDCs are going to be basically a blockchain that the central bank can basically be in direct issuance of currency rather than relegating it to basically different banks. Because today banks can create money, but going forward in the future, CBDCs, essentially everything could work through the central bank, and then you can have the fintechs play a role in terms of, you know, how, where, and what the money does. But basically the issuing person now could be, rather than be the banks, you can have the central bank basically being in direct control of monetary, fiscal, policy, and it basically gives them unparalleled access into the financial transactions that happened, and so they don't have to go seeking for information. So it's a more transparent way of doing things, but it's definitely not going to be the finite amount of Bitcoin. I think that's where Bitcoin comes in to compete, it becomes this parallel technology that is basically finite compared to the infinite monetary regime that we have now. But CBDCs definitely will be here to stay in the next like 2 to 3 years for sure.
But I remember the attractiveness of cryptocurrency was actually being your own bank. But, you know, with the CBDCs coming out, would you still be your own bank?
I don't think it's. I think there's going to be institutions that will kind of how you have like Coinbase that has Coinbase custody. There will be institutions that perform like bank-like functions because not everyone's going to want to store their private keys. I think the CBDCs will have private keys, but I don't think everyone is going to want to store their private keys. So it's going to be up to things like, you know, digital custodians that will act like the new banks. We already have the new age banks. The only thing is. We haven't given custody over to them formally yet, the same way we're giving custody over to the banks today.
All right. So quickly now, India has reversed its ban on cryptocurrencies. You know, what does that mean for other countries like, say, for instance, Nigeria, that's, you know, still has the ban ongoing?
It's a lot of just doing due diligence. In the beginning, you had a lot of regulators scared about what cryptocurrency meant to the sovereignty of their currency. But when you have a look at Bitcoin, a lot of regulators would realize that not plugging into it is almost like not plugging into the internet back in 1999. And so in the beginning, it's very scary. Like you have this new parallel system running. But just going forward, it's going to be hard. It's going to be hard to basically disregard. And so when you see the financial freedom that it brings, and the open, permissionless, borderless technology that Bitcoin brings in countries like Iran and North Korea and all these other countries that are banned from the payment rails of the U.S., it definitely does open up a new financial paradigm where you don't need anyone's permission. And so when these countries don't want to participate in it, it's almost like they're shooting themselves back 20, 30, 50 years. Because it's either you conquer this technology in the game theory of things or you're dead last. It's either you get on the internet or you stay in your dial-up.
All right, Michael, always great to talk to you. Thank you so much for your time.
Thank you so much, Laddie. Bye-bye now.
All right, Ini, there you have it. The money is exiting the alts right now. We have double-digit losses, Room down 17%, KSM down 16%. It's a bloody street. Yeah, bloody street. But I hope by Monday, it would have turned the other way. Hopefully. All right, well, that'll be all we can take on Business Morning, but do remember that at 1:30 we have Business Incorporated. We'll have updated stories and news from the world of business for you. Do join us then. I'm Ini John Mekwa. And I'm Laddie Williams. Thank you for watching.